good morning, everyone. Hope you're all doing well. It is Monday, another day, another week, another move towards the end of the month. And we got some news here for you guys this morning. One of the main things that I saw that was kind of floating around was based on Apple, right? Apple kind of gapping up right now, but Apple and OpenAI are reportedly in the final stages of discussion to bring ChatGPT to the next iPhone. If this deal finalizes, the popular chatbot will headline the new AI features that Apple is set to unveil next month at the annual Worldwide Developers Conference. So meanwhile, discussions with Alphabet, Google, right? Alphabet's Google for the licensing, for licensing its AI model Gemini for the iPhone are still ongoing. And Apple may reach an agreement with both OpenAI and Google or prefer one over the other, which we'll see. So based on that news, we've seen a little pop here as Apple has struggled a decent bit throughout this year, especially with the most recent explosion of AI, and Apple seems to be far behind the pack realistically. So it's an interesting subset, right, where they could be getting rid of Siri and using these other AI features that have already been developed by other companies. So on that news, Apple's gapping up a little. We're still at the top of this distribution after a pretty solid earnings response from the tech giant here, second greatest market cap in the publicly traded space in the U.S. And realistically, I was a little more bearish on Apple, trying to see if this gap can get filled to the downside. And if it does, we could start to see kind of movement in big tech names a little more to the downside. Now, with Apple, with tech, with all this news, we're coming out of a low volatility, low news week that was last week. That was honestly fairly hard to trade. If you guys joined me on Friday, I had a lot of difficulty realistically posting 2 red days last week, which is a little more rare, but it was a difficult week to trade in my opinion. The distributions held fairly well, but stubbornness got the best of me. Now this week we've got a lot more news that's headlining here. Let me just remind myself of what that is, because we have inflation data that comes out starting tomorrow. Pre-market PPI data comes out tomorrow. In the morning, Jerome Powell comes on the wire. So we're already starting to flood the start of the week with a little more news, a little more movement in the market, ideally more volume that checks out. And then Wednesday, we got our coveted CPI pre-market. We got a few other data points, and then we'll wrap it up with unemployment claims and some Fed speakers sprinkled throughout the week. So already we're in a position to look for some higher movement, higher volume, which should be a much better trading environment on a day trade basis for those that might have not been as patient last week. There is some other news out of the US and China trade talks, right? Quote unquote trade wars, blah, blah, blah. So the war for global economic power is set to take yet another turn this week as the US looks to shield domestic industries and workers from foreign competition. It's a notable development for President Biden, who has kept in place all of the Trump administration's steep levies on about $370 billion of annual imports from China. Not only will those continue to remain following a years-long policy review, but further protectionist measures will likely be unveiled at the White House event tomorrow. So reports suggest that the tariffs will quadruple on Chinese electric vehicles to 102.5% from 27.5%. I think that this is a big step, because what I've been seeing all over social media and everywhere, and just the internet alone, the progress that China has made on the electric vehicles is impeccable. Honestly, they look great. If there were much cheaper models in Europe, which I think it's more accessible than other places, it would be a massive, great addition, I think. Realistically, Europe and the US are just fighting them off at this point. They can't develop as cool, I think, and nice technologies as China has been progressing. My opinion, realistically, you can look at some of the names like BYD has a pretty cool car. Xiaomi also releasing something. But these massive increases in tariffs are most likely going to weigh heavily on this. So duties will also be hyped on the solar industry, while other sectors that may see tariff double or triple could include steel and aluminum, batteries, and other clean energy goods. Some see that the tariffs are merely symbolic, as exercising tariffs has already locked Chinese cars out of the American market, which, like I said, if they get in there, going to be trouble for Tesla. While many Chinese solar companies circumvent the duties by exporting to the U.S. via transit locations in Southeast Asia. There has also been a big debate in recent years about whether additional tariffs would harm the fight against inflation, and the debate is likely irrelevant now as the worst of the price pressure has have come down, and the U.S. gears up for a continuous election cycle. So, protecting industries in key battleground states like autos in Michigan and steel in Pennsylvania are at the forefront of some of the races, and both sides are eager to address national security concerns, the loss of manufacturing jobs, and the risk associated with supply chain. So, meanwhile, billions of dollars in subsidies have been doled out to key American sectors through mega spending measures, including Inflation Reduction Acts and the CHIPS and Science Act. So we'll see how that progresses, right? A lot more news this week, which should really, really help the volatility and volume in these markets on a day-to-day basis. So the U.S. has also warned that China is flooding the market with subsidized goods, with Treasury Secretary Janet Yellen recently flying to Beijing to discuss unfair trade and industrial overcapacity. The bigger fear here is the protectionist policy could eventually become indistinguishable from industrial policy, and China Foreign Minister spokesman Lin Jiang has promised that Beijing would take all the necessary measures to defend its rights and interests. If China would retaliate, it could target American agriculture exports or impose limits on critical components that the U.S. still doesn't have in its domestic supply chain, like rare earths. In terms of some of the other news, right, we've seen that the dollar strength makes American travels abroad relatively cheap, but that also comes at some kind of cost, right? According to Wells Fargo, when money is spent abroad, the expenditure is counted as an import in the GDP accounts because it is consumption that doesn't contribute to the value added to the U.S. economy. So the U.S. dollar index, we can look at it here, DXY, is a measure of the dollar's value against 6 currencies, up about 4% this year, right? Toppling over just a bit. So this generally has an inverse correlation with the U.S. market, and we've seen that there's overall strength, especially when we compare it to the Japanese yen. Currency analysts have widely said that support comes in part from the Fed's higher for longer stance on interest rates. So, like I was saying, we got a few Fed speakers this week. We're going to start off with Fed's master. That should be on the wire now. We'll see what that brings. And then we have, like I said, Jerome Powell tomorrow and some other Fed speakers. So last week was, like I said, for me a little more difficult. I was playing against the information I had, which was a terrible, terrible idea when trading, especially with futures. And right now, if we go into some of the breakdown of what we're looking for, all in all, I am looking for some upside momentum to continue this rally, especially if we get above that 52.65. We're at a pivotal point where mass absorption happened on Friday into these highs that spurred a 30-point net drop in the market before kind of stagnating and just finishing the Friday garbage-like. So there is a potential. You start breaking above that 52.65, I don't think it's going to be very easy trying to short this. I think that there's still potential to the upside until we start moving under 52.44, 47 area. This midpoint of this distribution, right, kind of like the POC on the overnight, distinguishes this heavy volume from the light volume that happened on Friday. So if we accept into that distribution, that's where more of the shorts are going to come out realistically. So until that happens, I really want to stay sidelined to see how the information gets processed. And if we do indeed see continued absorption into these highs, as we saw on Friday, which could topple things and create more of an area of people getting trapped at the highs and a potential turning point in these markets. So it's something I want to go forth, especially when the volatility and volume start changing from last week. We start getting into a space where the movement's going to change slightly, and you want to be adjusting for that, right? And trading a bit smaller to begin the week, right? Getting I guess, acclimated to the movement and going forward from a risk management perspective, step by step, right, slowly but surely, and really pinpointing where the imbalances and the massive activity happens in this market. So those areas where I'm expecting some activity are where we're trading right now, 52.63 area, 52.45 area, 52.33 area, right? 3 main areas I'm going to be watching today that could help keep us on track. So I want to thank you all for coming on. I'll see you guys tomorrow. Let's open up our live trading room. I'll see you in community.tradeproacademy.com. And then this Friday, we'll wrap it up with yet another stream, right? Ideally, we get our heads out of our butts and can do this properly. So I'll see you guys there. Let's lock in for the week. Let's do this right and enjoy the rest of the day.